Great to see you, Courtney. I think as the year moves towards a close, you're going to see continued elevated volatility. Let's understand, markets are absent their comfort blanket. Their comfort blanket really is corporate earnings. We're not going to get those corporate earnings until January. So you're in a little bit of a vacuum right now on the calendar. Markets are trying to understand a very hawkish communication from the Federal Reserve being countered by a yield curve that is mystifying investors by continuing to flatten. So that's kind of a push-pull, Courtney, which something's got to give in either direction. So I think that's leading to the volatility. But let's be clear on something. Markets are still in a good place. The S&P 500 is still sitting 50 handles above its 50-day moving average. So there has not been a technical breakdown.
So it's interesting that we mentioned about some of these breakdowns. You know, Greg, I'd like to work into the conversation. One of the places that we're seeing a more pronounced breakdown on that technology growth side of things is in software and cloud computing stocks. Many of them are down big, and some of the big ETFs that track them are down big as well. What does it tell you that cloud computing type stocks are taking it on the chin much harder than other parts of the market, even in technology?
Well, it tells me that what we're having right now is a psychological reaction. And as we noted, the tech names en masse are down. And that, again, is the psychological reaction, because at the end of the day, the threat of a tightening cycle is traditionally a strong headwind for growth. But we need to distinguish between what is profitable growth, what is strongly entrenched category killing growth, and what is unprofitable and quite speculative growth. And in the case of the latter, I would agree with this type of movement. In the case of the former, this is probably an opportunity. When we look at structural companies like Microsoft that delivered 27% operating margin growth and 46% operating margin. When we look at something like Adobe that delivered 22% revenue growth and 46% operating margins. Google, 1,500 basis points of margin expansion and 44% top line growth. And so I'm going to want to dig in to a sell-off like this and distinguish one from the other.